When it comes to investing in 2025, one of the biggest questions many people are asking is, should I put my money in small cap stocks or large cap stocks? Both have their own appeal, risks, and rewards. But understanding where the real opportunity lies can help you build a smarter, more profitable portfolio this year. Let's start by breaking them down. Large cap stocks are companies with a massive market capitalization, typically above $10 billion. These are household names like Apple, Microsoft, and Unilever, stable, reliable, and often seen as the backbone of any diversified portfolio. Investors love them for their strong financials, consistent dividends, and ability to weather economic downturns. They're less volatile and offer steady, long-term growth, perfect if you're a conservative investor looking for stability and predictable returns. In uncertain markets, large caps act like an anchor. They might not grow fast, but they rarely sink. On the other hand, small cap stocks, usually companies valued under $2 billion, represent innovation, growth, and potential. These are the up-and-coming businesses that could be tomorrow's big players. Think of them as the hidden gems of the stock market. They often operate in niche markets, adopt disruptive technologies, or target emerging industries. Because they're smaller, they can grow faster than large corporations, meaning your returns could be significantly higher if you choose wisely. However, that growth potential comes with higher risk. Small caps can be more volatile, vulnerable to market shocks, and less liquid, meaning they're harder to sell during downturns. In 2025, though, this volatility might actually present opportunities. With inflation stabilizing and innovation booming in sectors like AI, green energy, and fintech, small-cap companies that adapt quickly to new trends are likely to see major upside potential. Now, the real question: where should you invest in 2025? The answer depends on your goals and risk tolerance. Large caps offer security and reliable performance. They're ideal for investors who want to preserve wealth while still seeing moderate growth. They're also a safer bet during global uncertainty or slow economic recovery. Small caps, meanwhile, are where you look if you're seeking high growth and are willing to take on calculated risks. If you're investing for the next 5 to 10 years, adding small caps to your portfolio could boost your overall returns significantly. But balance is key. Diversification remains the golden rule. A smart strategy for 2025 might be a barbell approach. Anchor your portfolio with large cap stability while allocating a portion to small cap innovation. This way, you enjoy steady performance from one side and potential explosive growth from the other. Another point to consider is how interest rates and the economic cycle affect both. When interest rates are high, small caps tend to struggle because borrowing costs rise, and investors prefer the safety of large, established companies. But as rates begin to fall, as expected in the mid to late 2025 forecasts, small caps historically rebound faster and stronger. This makes the upcoming year an interesting turning point where small caps might outperform large caps for the first time since 2021. That said, not all small caps are worth your attention. Focus on those with solid fundamentals, strong revenue growth, low debt, and innovative products. Use ETFs or index funds to reduce individual company risk if you're unsure where to start. In short, large caps give you security, small caps give you opportunity.